Investors, we are 5 days into February and 9 days away from Valentine's Day, which reminds me, I really need to begin thinking about Valentine's Day gift ideas. But no, not now. Let's keep our focus here. January is behind us, over, done with, which means I get to run through my January dividend income with you all. And if you're new to the channel, I'm Ari, your value and dividend investor here on YouTube with one mission and one mission only. That is to help spread dividend stock ideas, provide macroeconomic insights along the way, and just show you through my portfolio so you can ultimately see for yourself just how powerful dividend growth investing really is. Now, before we dive in, please help me in growing this channel by simply tapping on the thumbs up button, and do us both a favor here in subscribing to the channel to ensure you're getting weekly dividend stock ideas. With that, let's dive right in. So investors, just given the intent of today's video, we are not going to be diving into a macro overview, but that's all that means is you yourself should be taking it upon yourself to keep up to speed with our economic backdrop, because as I always say, macros do matter in order to understand how these companies that we invest into are impacted. And think about it, if every CEO is concerned about economics and how it will impact their business to some extent because you essentially own the businesses that you're investing into, you should care as well. Now, as for my personal portfolio, I will share with you that my dividend portfolio is currently sitting at $108,482.14, in large part due to a lot of recent momentum in the market, but honestly, I'm looking forward to more volatility to really double down on my core positions. Now, speaking of which, before I really get into the dividend stocks that paid me out in dividends during the month of January, I want to share with you that my portfolio has been undergoing some changes. A few years ago, during the 2020 investor craze, I made a mistake. Yes, I said it. I made a mistake. And I made a mistake in spreading myself too thin because I felt I needed to score a bunch of dividend stocks, and I favored quantity at the expense of quality. This meant I truly didn't scale what I feel could have been an indestructible dividend portfolio. Now, this time last year, my portfolio was sitting at roughly $87,243, and according to last year's January income video, I shared that 6 dividend paychecks came in. This January, I actually am pleased to share that my portfolio is not only performing better off, but over the course of the last 11 months, I successfully trimmed my portfolio and sold out of 3 holdings that otherwise would have paid me out in January. The stocks that I sold out of were natural gas distributor PPL Corporation, an advertising giant Omnicom, and a REIT Store Capital. Each of these positions were sold for a profit, and the capital is then, of course, allocated to positions that I consider to be my core 10 to 12. And with that, let's break down the 3 stocks that paid me out in dividends this past month. If you've not seen a monthly income breakdown video of mine before, and you are in fact brand new here, note that I'm not just going to share with you the company that paid me out in a dividend and how much they paid me, but I'm actually going to give you my honest thoughts on each of these companies and whether I think they're a buy at this time. So let's rewind all the way back to the 13th of January, where 2 out of the 3 dividend stocks paid me out in a dividend, with the first dividend stock that I want to talk about being Realty Income, ticker symbol O, which I feel many of you, especially if you are a true dividend investor, already know about. It's a powerhouse of a REIT that was founded back in 1969 and has literally become the leading net lease solutions REIT, meaning their clients cover the full cost of all properties that they lease. Now, Realty Income's portfolio is what impresses me the most, given its sheer size, spanning across the United States and well into Puerto Rico, Spain, and the United Kingdom. Within these properties, Realty Income leases to any one of their 1,100 plus clients that range from your go-to 7-Eleven to your Walmarts and your Home Depots. Overall, Realty Income comes in with a hefty $42.5 billion market capitalization, yet over the last few months it has been rocked by the market volatility, where the stock fell to a low of around $60 per share, but climbed back up to its current share price around $67 per share, which is a handful of dollars away from their peak of $73 in August of 2022. Now ultimately, while there has been a recent amount of hedge fund activity with hedge funds scoring more shares worth of Realty Income, I'm here to say I think we can actually get a better buy-in price for Realty Income, especially given they're just about at the analyst expectations of $69.83 per share. However, should the price drop to the low 60s, heck, even hit the high 50s, I would definitely begin buying more shares myself. At this time, I hold 103 total shares worth of Realty Income, which allowed me to receive $25.71 thanks to their dividend yield coming in at 4.35%. Later that day, a medtech healthcare leader also shelled out a dividend my way, which was Medtronic, ticker symbol MDT, which has been a medical device company in business since 1949 in delivering revolutionary healthcare equipment to the market year over year, allowing for its market cap to soar well above $109.85 billion. However, Medtronic has faced a fair share of issues over the last few years, especially from disrupted supply chains, and then of course an economy that has called for their clients, mainly hospitals, to simply scale back on spending, which hasn't been great news for a company that strictly sells medical devices to, well, hospitals. So as a result, we see Medtronic's share price way down on the year, just at $82 per share, whereas once trading for around $110 at its peak over the last 12 months. That's a 17% decline. And although its price per earnings is still a bit high here at 25.7, it hasn't stopped smart money from investing into this medical technology leader. As for analysts with near-term forecasts, we see a 5.5% sliver of upside, with the share price coming up to $87.80 per share. Now, all in all, Medtronic is really looking more of interest to me, and certainly a buy that I may be throwing a few grand into. At this time, I hold 25 total shares worth of Medtronic, and I received $17.17 given their dividend yields coming in at 3.23%. And as for our third dividend paycheck that came in on the 17th of the month, it was from the second REIT within my portfolio, Stag Industrial, ticker symbol STAG, which is a REIT focused on the industrial sector with a vast majority of their portfolio comprising of warehouses and fulfillment centers, which is, in my opinion, and just based on the way that I see our future when it comes to e-commerce, well, ideal, especially when you understand that Stag Industrial's clients can range from Amazon to FedEx and a plethora of other logistic companies. Now, Stag Industrial's share price is actually down on the year by nearly 13%, trading for around $35 per share, which is actually up from a few months ago, but I feel the opportunity to invest with Stag, if you do believe in more of an e-commerce centric future, is on the way, then ideal. I mean, we are talking about a $6.42 billion market capitalized REIT that was only founded roughly 10 years ago, yet managed to scale a portfolio to over 500 buildings across the United States, despite all of the market mayhem, which is pretty impressive in and of itself. But looking ahead, we do see some bullishness from analysts, with a target share price coming back up to $42 per share, presenting about an 18% worth of upside opportunity. But as of this video, I own 29 total shares worth of Stag Industrial, allowing me to collect $3.61 because that dividend yield of theirs is coming in at 4.08%. Now, just for having cash on the sidelines within a Vanguard settlement fund, I also received a sizable dividend worth $33.06, bringing that grand total for my monthly dividend income to investors, get this, $79.55, which may not seem like a whole lot, but when you dive into the dividend tracker, we can see just how beautifully this dividend snowball is rolling as we reduce the amount of holdings in the portfolio, yet still came in way over our previous January totals and nearly doubled last year's. Of course, we have 11 whole months left to go in 2023, so be sure to keep up to speed and continue to witness and experience my dividend investing journey. But now I have to ask, how much did you bring in during the month of January when it comes to dividend income? And moreover, which stocks were your highest paying dividend payers? Comment down below to let me know. And most importantly is tapping on that thumbs up button and joining me on this very journey by simply subscribing to the channel. As mentioned, every single week, you're going to get brand new dividend stock ideas, so you're surely not going to want to miss out. Now, with all of that said, investors, we'll see you in the next video.